Before the market opened yesterday, we told you it needed a correction, and then it proved us correct. This is Invest with Jacob. So the market traded sideways before pulling back 23 points at the close because of the Fed. Or at least that's what CNBC told me. But did it really though? We'll get into that in just 1 minute. But first, if you're new here, guys, welcome to the show. My name is Jacob Gabbard, and this is Invest with Jacob. And I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. I was kind of amused today. CNBC sent me an email with a headline that basically said, Fed causes market pullback. But did it? The market was already trading down before the Fed spoke, and at 2 o'clock on the dot, before you could have ever even read the Fed minutes, that was the biggest part of the pullback. So the pullback had already been done before anyone knew anything about the Fed. Again, this is why I tell you that news cycles don't move the market, but they can be catalysts. But I don't even think this was a catalyst. There was nothing in the Fed that's been different from the last 10 Fed meetings. They've all said we're going to keep buying bonds and mortgages, and we'll let you know when we're not. And that's what they said again today. Now, it's not a big deal. It doesn't matter. The market pulled back. That's the facts. But the narrative is always that some news cycle is driving the market, and that's just not the case. In my opinion, it's Elliott Wave Theory. One of the reasons I believe that is before the Fed meeting ever happened, I told you this market was top-heavy and needed a pullback, and a big correction, to be quite honest, and I think we're starting that. Now, admittedly, I did say the structure looked like it should go for one more top, and it didn't do that, but we were ready for the pullback. We knew that was coming, and it did come today. So that is the power of Elliott Wave, when you can understand when market shifts are coming before they come. Let's jump into the chart and take a look at what happened and what's happening in the futures, because I think we're starting a bigger pullback and hopefully get that correction we're looking for. Okay guys, so here we are on the ES futures chart, and we can see it started to fall off here about midday, popped up a little, and then right here, this 4 candle, this giant move down right here, this was at 2 o'clock on the dot before anyone could have ever read the minutes or done anything else. It was already making its move. So it made its move down. It popped up actually when the Fed started to speak, and then continued its collapse down all the way to 41.83 in the overnights, and now it's trying to climb back up in what I'm considering a B-wave bounce. Now this structure is going to have to fill out a little bit more to see what kind of pullback or correction we are going to get. Is it going to be a more shallow pullback type play here where it comes down and then bounces and does get that one more high, or is it going to be the larger correction that we're looking for that's 200 to 300 points and takes us down to around the 4,000 region? My preference is the bigger correction. Number one is it resets a lot of market indicators, giving us a lot of room to run to the upside. The second reason is there's still a lot of money on the sidelines. A lot of big players are waiting for a good buying opportunity. They didn't see it in this choppy market we've been in that's been top heavy and kind of making highs but not really moving up. And they're looking for a nice solid pullback to put that money into the market. What that creates is big moves up, it creates solid structures for Elliott Wave, and it eliminates all this nasty choppiness that we've been looking at for the last several weeks that have made it very hard for traders, especially swing traders like our channel, to get solid foundations to make trades. We've done our best and we've had some successful trades and we've had some losers, but trading in a choppy market is hard for the most advanced traders. So we have a few key levels. Okay, the first level is 4190 SPX. Now, it clearly broke through that when it got down to 4183, but that's in the overnight. It could easily bounce back up out of that and back over 4190 SPX and hold that zone. If it does and it bounces from there and goes up, we're looking for one more high and then our bigger pullback. If it doesn't hold 4190, the next target is 4150 SPX. If it holds 4150 and moves up, then you're looking for actually a pretty solid move up to about 43.60 before we get the bigger 200 to 300 point correction that we're looking for. So we need to watch and see where the bottom of this correction happens. Now my personal belief is since the futures took it down below 4190 SPX, I think that is not the low. I think that's a bounce here. This is going to be a B-wave dead cat kind of bounce, and I think we're headed to at least 4150 SPX. If we get to 4150 SPX and bounce from there, that could be a buying opportunity. Doesn't mean it will be. It's going to depend on the structure and how it moves up off of that 4150 zone to see if we're going to go lower. But if it moves up and looks like it's made a bottom and it's going to kind of start a new 5 waves up, then it could turn into a buying opportunity. So that's what we're going to be monitoring and watching over the next several days or possibly weeks to see where this bottom comes into play. And then we will be looking for our next buying opportunity. If we get the 200 to 300 point correction, it is absolutely a buying opportunity, and we will be in heavy there because that will be an excellent place to buy the market and look for a big move up out of there. So guys, if you want my real-time market updates and want to hear where we're headed in the market, what I think the support and resistance zones are, when we're going to make a buy, what we're buying, and when, and what our expiration dates are, you need to get in my Facebook group. There's a link down below in the description. Go ahead and click that link and get in my Facebook group. The only requirement is that you subscribe to this YouTube channel. So hit subscribe first, get in that Facebook group. Inside there is a link to Slack. Slack is just a free chat group, and that is where you get access to my real-time market updates. You can ask me questions. You can pick my brain. I'm in there all day. I love helping people out. It's a great trading room. We'd love to have you in there. So guys, key takeaways for today, start with the key levels. The first key level is 4190 SPX. If we break through that, which I think we will since they already did it in the futures, we're headed to at least 4150 SPX. Break 4150 and we're looking at that larger correction that we want. After that, we'll decide where the bottom is and when our next buying opportunity is. Okay guys, so that is the market update for today. Happy trading. I will talk to you tomorrow.